Hi there, it's Bill with Smart Trades. It's Thursday, June 16th, around 2:35 p.m. Pacific time. And sorry I've been away for so long from the charts. If you'd like more frequent updates, please visit smarttrades.com and subscribe to my newsletter there. I update pretty much every day, either through email newsletters and also via Twitter. At any rate, let's take a look at the S&P. Here's a weekly chart of the S&P cash. And although I was looking for about 1275 in the S&P on this triangle pattern that I've noted for some time, we have gone a little bit lower than that. In fact, I believe today we closed just over 1267. That's up a couple of points from yesterday. But all in all, the triangle is still possibly holding. I have my doubts about it. In fact, the Nasdaq's already taken out the A wave low. That's the March low, and has eliminated the triangle in that market. However, the S&P is still hanging on by a thread to the triangle pattern, and it's possible that it's still intact. Here we have our A down, March low, B back up, C back down to our current low, which may or may not hold. I'm certainly not convinced that it will. I think we might go a little bit lower. We might go down and test this trend line. I'll get into that in a minute. But it is possible, and it does fit rather nicely, if we do hold here and go back up and test, say, 1340, 1350 for D, that E of the triangle is going to coincide not only with this triangle extension, but with the longer term trend line, somewhere around, maybe 1280 or so, a couple months from now, or maybe a month from now. Again, this is hard to say at this point exactly how the triangle would evolve, if indeed we're even still in one. And again, I have my doubts. Now here is my preferred count at this point. I had mentioned this count actually, and I'd abandoned it, or at least put it in as a secondary account a few weeks back, and that is that we're in an expanded flat. A down to the March low, B up to a moderate new high at about 1370, and the current leg down is C. Initially we were going very slow. It didn't seem like a C leg, but we sure have caught some steam to the downside. And ideally, if indeed we have an irregular or expanded flat, it's going to bottom somewhere around 1245, 1250 or so. If we have a 1.62 relationship of C to A, that would take us a bit lower, perhaps down to about 1215, 1220. And we shall see. The nice thing about that 1245 area is that also coincides with that long-term uptrend channel. And so if we were to drop down and bottom in that area, that'd be very interesting indeed as far as I'm concerned. You can see volume and momentum have been dropping off on a weekly basis, even though it seems like we've been through an acceleration. In fact, the market is not really making a lot of headway to the downside. It feels like it. It feels like we're in a meltdown sometimes, but obviously we haven't even taken out the March lows yet. Now that said, there is a much more bearish scenario that may be working out. There are some super bears out there that subscribe to this notion, and indeed I think it's prudent to take a look at this, because if we are, if we peaked up at 1370 on the S&P, and this is a wave one down, a third wave could take us, to about 1,000, maybe even lower than that. So it certainly pays to be aware of this scenario. And if we take out the 1200 area, I would tend to take another look at this and say that perhaps this is the count. However, two problems that I see with this count. One, the final leg up, what I'm counting is 5. You could count it differently, but it's an ABC pattern. I think that it's a huge force if you try to count this as a 5-wave pattern to the wave 5 high at 1370, and therefore more than likely it's not a fifth. It's not a wave 5 at all. Also, there is no alternation between waves 2 and waves 4. While alternation is not a requirement, more often than not, there is alternation, and in fact, you really should look for it. That said, let's assume that there is some count that, in hindsight we'll be able to look at here and count this as a fifth wave. If we take out this what would then be previous fourth wave support, come down, rally back up and fail, let's say around 1200, 1250, somewhere in there, and then start down again, there's a very good chance again that that is a third wave down, and it's very bearish. Again, 1,000 in the S&P would be a minimum target in my opinion if this is an intermediate term top up here at 1370. Again, I want to emphasize I don't favor that scenario, but I'll keep an open mind to it, again, particularly if we take out 1200. Here's a 130-minute chart, and this is a little bit dated. All these charts are a bit dated. I did them a bit before the close. And you can see here the very strong bullish divergence of the breadth. We have what is developing potentially as a wedge C wave, if that indeed is the correct count. And wedges tend to be they tend to persist for some time, but when they finally reverse, they reverse with a vengeance. So it is worth noting here, if we get down in, if this wedge persists and we get down around 1245, 1250, it would be something to look at. Also, Apple. I've talked about Apple on several occasions in the past, and I had originally counted this decline that we're currently in off of the, I believe it's the February peak, as a triangle. Now we've taken out the March low now in Apple, so the triangle is broken. However, if you count this as a flat or a bull flag and you connect the recent lows, they coincide with the long-term uptrend channel shown here around the 315 area. So we got to 318 today. I guess you could count that as a hit. There's a possibility certainly we could go back down and hit it more precisely, or even throw over those trend lines just a bit. So an area to watch for sure in Apple, and I think it will help power the market if indeed it holds, or hurt the market if it fails, is that 315 area. Now a breakup of 300 or so I think is bad news for Apple and also bad news for the broader market. So I think it's a key area to watch. Also note here very clearly on this decline, the decline itself, a clear corrective pattern so far. The ADX is declining, volume is declining. The bottom line, pardon the expression, is that this decline in Apple looks corrective. It just is very clearly corrective up to this point. Sometimes these things evolve into something other than how they look at the start, but so far, this decline looks corrective. NASDAQ update. Okay, the NASDAQ, again, we have ABC decline, ABC rally, and this was my original count, if you'll remember a few weeks or a month or two ago, was that we were going to have a flat, and that has come to pass, at least in the NASDAQ, to the extent that we've already taken out the low of the March low, wave A of the pattern over here. Now, I don't know that we've bottomed yet. If we have, the S&P obviously has failed to take out that low. It's possible. It doesn't. There's certainly no clear five-wave pattern to the downside. And again, we may actually form a wedge here in wave C, which is not uncommon at all, and actually a very bullish pattern if it works out that way. It's too early to tell. I'm not calling for a rally here yet, but again, the minimum requirement for a expanded flat has been reached. We've made a new low. We've taken out the bottom of A in what is potentially a wave C decline, and eventually I think it will be a bottom. On to bonds. I've been looking at bonds for a while. It remains to be seen if indeed they're peaking here or not. You can see the parallel channel has worked out around 126 or so. We've got several peaks now. This is a third test of that area. And obviously, if the market keeps declining, there's a possibility bonds are going to take out that peak. Nonetheless, to this point, both in the TLT bond fund and in the actual U.S. Treasury bonds. That upper channel is holding, at least for now. We'll see how it works out. Gold. I had mentioned the 1550 area in gold, and that again is a parallel channel, ABC up. So far we've held the 1550 area. We've definitely stretched the limits of what a wave 2 should do, but we have ABC up, possibly a very small wave 1 down, and another wave 2 back up. So gold worth watching here. If it takes out 1550, and obviously if it takes out the April-May high, then we don't have a top. But it is possible we have a top in gold here. Silver, much more likely the top is in. You can see clearly here the very weak rally to this point. We may go up to 40 or 42 possibly yet, but I'm far from certain of even that, and it certainly looks like we have a top in silver. I had also mentioned the euro as possibly peaking, and I had looked about the I believe 142 area and then up towards around 146, 147. There's a congestion here off of the April-May peak. That area has produced resistance, which to this point has held. It's not a perfect count by any stretch of the imagination, but I think this does count best as a wave 1 down, an expanded flat ABC back up, and regardless of whether the Elliott wave count is correct, this is a very nice pattern, and I see this quite frequently on various time scales where you get a peak with a congestion, the market goes up and tests the bottom of that congestion and fails, and that's oftentimes a nice place to look for a reversal of and a change in trend. And crude oil, I got a lot of flack for calling for a top in crude up when it was testing that 115, 117 area, but I do believe that that is at least an intermediate term peak. So far the decline, best counts is impulsive. The move from that May low is kind of a mess. I do not have a definitive count. It's certainly possible you can count that also as an expanded flat with A done, and we're working on B now, and maybe C will take us back up into that 105, 110 level. I'll try to refine that more. And again, if you go to smarttrades.com and subscribe, I'll give you more frequent updates in terms of what's happening between my free video reports here. And finally, natural gas. Actually, in my report I had talked about the possibility that natural gas might peak around 5. I think it got to about 497. It's dropped like a stone from there. Certainly the rally, to my way of thinking, looks corrective. I think it probably best counts as A, B, C to this peak at 497. And I think we've got a intermediate term top probably on this corrective rally in natural gas. Once again, please join me at smarttrades.com, where you can subscribe to more frequent updates. Thank you so much for watching. Have a great Friday and a great weekend if I don't talk to you before then. Thanks for watching. Bye-bye.